Welcome back to Stock Talk, everyone. Today we're doing a deep dive straight into JD.com's Q1 2025 financials.
Yeah, let's get right into it.
And the headline number is pretty strong. They've seen a 15.8% jump in revenue year over year.
Which brings them to RMB 3 or 1.1 billion. That's about, what, US $41.5 billion?
Exactly. And maybe even more impressive, the net income surged 52.7%.
Wow, 52.7%. That's huge. Hitting RMB 10.9 billion or US $1.5 billion roughly.
So some really big numbers up front. And look, if you're finding this kind of analysis useful, please do, subscribe to Stock Talk, give us a like, maybe drop a comment with your thoughts, and definitely share it if you know someone tracking JD or the e-commerce space.
Yeah, absolutely. Your engagement really helps us out.
Okay, so let's unpack these figures. What's really driving this performance?
Well, that overall 15.8% revenue growth, it's not just one thing. It's actually built on pretty solid growth across both their main income streams.
Right, the product side and the service side.
Precisely. Product revenues were up 16.2%. Very healthy. And service revenues also saw a really significant jump, 14.0% compared to Q1 last year.
So double-digit growth pretty much across the board there. That definitely points to, broad strength.
It really does. It shows the diversity of their offerings is paying off.
And it's not just top-line revenue, is it? They seem to be getting more profitable, too. Income from operations saw a big increase.
It's a very substantial one. Up 36.8% year over year, landing at RMB 10.5 billion.
What really stands out to me there is the operating margin improvement. It went from 3.0% last year to 3.5% this quarter.
God, that's a key point.
It suggests they're managing their costs better even as they're growing bigger. That's always a good sign, isn't it?
Absolutely. That efficiency gain is critical, and you can see it flowing right through to the bottom line. That 52.7% jump in net income we mentioned, it pushes their net margin up quite a bit, from 2.7% to 3.6%.
So they're keeping more of every yuan earned as actual profit?
Exactly. And you see that reflected directly in the earnings per share, or per ADS, rather.
Ah, yes, the American depository shares for trading in the U.S.
Right. So diluted earnings per ADS jumped by a really notable 58.7%.
Yeah.
Comes out to RMB 7.19. Looks very strong on a per-share basis.
And they're sitting on a lot of cash, too, I saw.
They are. The report mentions RMB 203.4 billion. That's about US $28 billion in cash, equivalents, restricted cash, and short-term investments.
That's a hefty cushion. Gives them a lot of flexibility for whatever comes next.
It certainly does. Provides a really solid foundation. Okay, so should we break down the segments?
Yeah, let's do that. How did the different parts of the business contribute? JD Retail is the big one, right?
It is. That's their core e-commerce. Plus, it now includes JD Health and JD Industrials. And it saw really robust revenue growth, 16.3% year over year, hitting RMB 263.8 billion.
And the profitability improved there, too.
It did, and quite nicely. Operating income reached RMB 12.8 billion, and the margin went up to 4.9%.
Up from 4.1% last year. So the main engine is not just growing, it's becoming more efficient.
Exactly. That really underlines the strength of their core operations.
You mentioned the report highlighted collaborations, like with Xiaomi, focusing on AI and innovation.
Yes, that's an interesting strategic point. By deepening those ties, they're ensuring they have the latest digital products, but also positioning themselves for future tech trends, especially around AI.
Makes sense. Aligning with where the market seems to be heading. Okay, what about JD Logistics?
Logistics also saw steady growth. Revenue up 11.5% year over year, reaching RMB 47.0 billion.
Okay, so still growing nicely.
Yes, but here, the operating income and margin actually dipped slightly. Came in at RMB 0.1 billion and 0.3% margin.
Down from 0.5% last year. Any idea why? Is that related to their expansion efforts, maybe?
That's a very good question, and I think that's likely part of it. They've been pushing hard internationally. They launched a new air cargo route to Bangkok. They opened a second warehouse over in Warsaw, Poland.
Warsaw.
And a new operations center in Hong Kong.
Okay, so lots of investment going into building out that global network.
Exactly. And those kinds of expansions, while crucial for the long term, they do come with significant upfront costs. That can definitely pressure margins in the short term.
Right, you have to spend money to make money, I guess. But definitely something to keep an eye on as they scale up internationally. Now, the new businesses segment, this sounds like where the more experimental stuff is happening.
Pretty much. This includes things like data and some other international ventures. Revenue grew significantly here, up 18.1% to RMB 5.8 billion.
The profitability.
Still operating at a loss, operating loss of RMB 1.3 billion, actually. And the margin worsened from negative 13.8% to negative 23.1%.
Ouch. So growing fast but costing a lot. What's the main driver there?
Well, the big news in this segment is the launch of their own food delivery business back in February 2025.
Ah, right. They finally jumped into that crowded market. How are they planning to stand out? It's super competitive.
It is. But their approach seems quite distinct, actually. They're really emphasizing quality, better food options for consumers. And they're talking about fairer commission rates for the restaurants, plus better protection for their delivery riders.
Interesting angle, leveraging their ecosystem too, I imagine.
Definitely. Tapping into their existing user base and logistics infrastructure. And they keep mentioning this 35 cents principle.
The 35 cents principle, what's that about?
It suggests they're aiming for, let's say, reasonable, sustainable profit margins from the get-go, rather than just burning cash to grab market share aggressively.
So maybe a more measured long-term play, relying on their logistics strength.
That seems to be the idea. Quality, ecosystem integration, fair practices, sustainable margins, and logistics excellence. That's their pitch.
Okay, that makes sense. And looking across product categories overall, did anything specific stand out?
It was actually pretty balanced growth. Electronics and home appliances, their traditional stronghold, up 17.1%. General merchandise grew nearly 15%, 14.9%. Yeah. And even their marketplace and marketing revenues were up 15.7%, and logistics and other services grew 13.0%.
So healthy demand pretty much across the board on their platform.
It looks that way.
Okay, so beyond the core financials and segment performance, what other big strategic moves have they been making? We talked about food delivery.
Right. Another really significant one is this export to domestic sales program they launched in April.
Oh, yeah, I read about that. They're committing to buy a lot of goods meant for export.
A lot.
Uh,
At least RMB 200 billion worth. And then selling them within China.
What's the strategy behind that?
It seems like a smart, dual-purpose move. On one hand, it supports Chinese manufacturers who might be seeing shifts in global demand. On the other, it gives Chinese consumers access to potentially different or higher quality goods originally made for export markets.
Huh. That is clever. Sort of leveraging their platform to connect domestic supply and demand in a new way.
Exactly, using their scale and supply chain know-how.
And what about brand partnerships? Are they bringing new names onto the platform?
They are. We mentioned Xiaomi in digital products, driving innovation, but they've also added new fashion brands names like La Prairie, Crocs, Massimo Dutti,
Okay, broadening the appeal there.
and JD Health is strengthening its position too. They're partnering with big pharma companies like Pfizer, Esteve, Inogen to be a key platform for launching new and specialty medicines.
Right, becoming a go-to channel for health products.
It seems like it.
And we should probably reiterate the logistics expansion, Thailand, Poland, Hong Kong. That international push seems really central.
Absolutely. It signals serious global ambitions in the logistics space.
One other thing, AI integration. You mentioned JD Health using it.
Yes, quite significantly. They're saying over 80% of their online consultations now involve AI assistance.
80%.
Yeah. And their AI nutritionist apparently has a 91% user satisfaction rate. So they're really leaning into using AI to boost service quality and efficiency.
Interesting. So AI isn't just a buzzword for them, it's being actively deployed in customer-facing services.
It appears so.
Now, shifting gears a bit, the report also touched on ESG, environmental, social governance factors. What stood out there?
Some quite significant things, actually, particularly around their delivery riders. They're now providing social insurance and housing fund contributions for their full-time riders. Reportedly, the first platform in China to do this for food delivery.
That's a big deal, especially in the gig economy context.
It really is. And they're also providing accident and health insurance for part-time riders, too. It shows a focus on worker well-being.
That could set a precedent. And the scale of their employment impact is huge, right?
Immense. They mentioned around 700,000 personnel within the whole JD ecosystem.
Wow.
And their human resources spending last year was RMB 128.8 billion. So a massive economic footprint.
And that 35 cents principle we talked about earlier, that kind of ties into this responsible business idea too, doesn't it?
I think it does. It suggests a focus beyond just maximizing short-term profit, considering other stakeholders.
They also mentioned shareholder returns.
Yes, they continued their share buyback program, repurchasing about 80.7 million shares for around US $1.5 billion, and they completed their annual dividend payout in April. So returning value to shareholders remains a priority too.
Okay, so pulling this all together, based on this Q1 report, what are the main opportunities and maybe the Key risks or challenges for JD.com right now?
Well, on the opportunity side, food delivery is obviously a big one, a whole new market for them. The export to domestic program seems really timely. The improving margins in JD retail are definitely positive.
Right.
And then there's the international logistics growth and the potential competitive edge from their AI integration, especially in health.
Yeah.
Lots of upside potential there.
Okay. And the flip side, what are the potential headwinds or things to watch?
Well, like we said, food delivery is tough. Making that profitable against fierce competition will be key.
True.
The report showed negative free cash flow for Q1. Now, that might just be investment in growth, but something you've got to monitor. Fulfillment expenses are rising, and we saw that slight dip in JD Logistics margins. That needs watching. And the new businesses segment is still losing quite a bit of money as they invest.
So some growing pains associated with these big strategic pushes.
Exactly. Balancing growth investment with profitability is always the challenge.
Okay, so to kind of wrap up our analysis, it really feels like JD.com put up a strong Q1 for 2025, solid growth in revenue, even better growth in profit.
Absolutely. The core retail business looks very healthy, improving profitability. And these big strategic bets, food delivery, the export program, they're clearly important for the future, even if they come with some costs now.
And their commitment to things like writer welfare and shareholder returns adds another dimension.
It does. But as we noted, there are definitely areas to keep a close eye on. That free cash flow, the path to profit for food delivery, how international logistics performs, those new businesses' losses, and maybe inventory turnover too.
Right. But overall, the feeling seems pretty positive about their position and where they're headed strategically.
I'd say so. The Q1 results paint a picture of a company executing well on its core business while making ambitious bets on the future.
All right, well, that brings us towards the end of this deep dive into JD.com's Q1 2025 financials. Quick recap. Strong growth, improving core profitability, and some really interesting strategic initiatives underway.
Yep, a lot happening there. And maybe here's a final thought for you, the listener, to mull over. Consider how JD.com's heavy investment in its own logistics network, combined with this 35 cents principle they talk about for profitability, especially in something like food delivery. How might that give them a unique edge?
An edge in that super competitive e-commerce and on-demand delivery world.
Exactly. What could the long-term ripple effects of those choices be on the rest of the market? Something to think about.
Definitely something to think about. Thanks for joining us today on Stock Talk for this deep dive.